Hello everybody and welcome to this week's trading tips from Smack the Markets for week commencing the 13th of December. So this week we're going to take a look at that decision that we need to make on every single trade that we take, which is when to close the trade, when to book profits or when to cut our losses. It's something that we get asked many times, which trade do we run for multiple targets? Which trades do we actually just book at one to one or first target and actually book 100% return? Now, taking 100% return on a trade is a very good return. It's a very legitimate thing to do, but there are some trades on some markets that are likely to run for multiple targets. And how would you feel if you cut a trade at first target when it actually went on to 5, 6, 7 or 8 targets and gave you enough return on multiple trades that you could have booked all on that single one? Now, in most cases this comes down to understanding price action, understanding the plan that you have for that trade and for that market, and also good clean risk management as well. So let's take a look at the trade of the week from last week from the trading room, which was on USDCAD, and talk through the reasons as to why we held into this particular trade and the aim to take more profit out of it. Now, in the trading room we call many trades. A lot of these are 1-to-1 trades, a lot of them are 2-to-1 trades, some are long-term swing trades. They're positions that we get into on typically with most of our trades. They're lower time frame entries, but we will actually hold into them for a longer period of time, aiming to take multiple profits out of that market. Now, the reason why we executed a trade on USDCAD and turned this into a swing trade was based all upon these higher time frames. The market here, as you can see, has had a big move to the short side here. We've had a big retracement, a very clean retracement here on the 4-hour time frame. There's hardly any let up in this relentless selling pressure as the market pulled right the way back into a very strong technical level. The technical level here you can see on the weekly chart, we can also see on the daily chart, and the market pulled into this level, and it also pulled into value areas where technically on the daily time frame and the weekly time frame we could start to see a bottom forming and possibly the leg here of a next move higher. Now, we started to see the evidence here of a turnaround on the mid time frames, and of course the question here is, do we look for a continuation long on this market of strong dollar against the caddy? And again, there's many reasons and many factors that we take into our trading decisions: strengths and weaknesses, the fundamentals behind it, what the dollar's doing, and all sorts of different sort of things. But we also look at the technicals and risk management as well. Now, this market could rally back on to the 128 level here. You can't probably see the numbers very clearly, but here on the weekly chart you can see that there's a very significant level at 128 where the market has tested multiple times here, a good 4 times, and failed and then fallen back. We could be after another retest of that 128 level. Now, of course, we don't know whether it's going to get up to 128, and the whole idea of any trade that we take may be to actually sort of get locked in, capture the risk on the trade, and actually see how far it goes. Ultimately, the time frames that we were looking at executing trades on were much lower, and we come down to a 15-minute chart and we wait for a bit more confirmation. So on this particular setup we saw the rounding here and the change of trend from a downtrend into an uptrend on the 15-minute chart. We waited for the breakout of this neckline, which was quite an important technical level on the higher time frames. This was also represented by the high of the daily candle, the previous daily candle, which also happened to be a relatively tight doji candle. So you can see here that the market broke out above that neckline. It broke out above the previous day's high. We got the pullback into the moving averages, and we got this sort of setup here. We had a pivot point here, the entry was above the pivot point. In fact, there was a number of different technical reasons as to why we wanted to take this trade as a 15-minute setup as it was. So this was the setup that we took. Stop just below the low, entry just above the high. You can see the print here that on the chart, a little bit late as the candle's actually just broken to enter the trade. So that was the trade setup. First target is just here, where this grey line, that's first target. So that's the scope of the risk on this particular market. You know, if we get here, then we can cover the risk on the trade and we're home free. You know, we're in a risk-free trade, I should say. So this is how the trade continued to play out. Now the market continued to move on. It wasn't the smoothest market. Now often trades that we take are on a bit more smoother markets here. We often get a fairly sort of strong conviction straight away as to whether this market hits first target pretty quickly or whether it doesn't and it goes to stop. This one took a little bit of time before it actually got to first target and then continued to move higher. Now once the market actually managed to get up here to first target, it also managed to put in a higher low on the trade on the time frame that we were trading. So we managed to do a couple of things here. Some traders took profits here and took at first target, they took some profits to lock in the risk. Some traders actually just moved the stop up to break even because this represents a new technical low. Either way, whether you did that with half the trade or whether you did that with the full trade, you managed to lock in the risk on the trade. So the rest of the move is risk free, and that's the important thing here, because we don't know ultimately what's going to happen. You can see this exactly what happened here. This was the CPI numbers that came out on Friday. They created quite a bit of volatility in the markets. This was expected. We were expecting a lot of volatility. Fortunately, the volatility didn't quite take the stop out, by moving the stop up to break even, and the market continued to move on. These grey lines represent the target levels. So at the moment here, this is sixth target that the market has now passed, and it's sort of moving on quite nicely. So the question is, I suppose, why did we manage to hold into this trade? Why did we turn this trade into a swing trade rather than actually just close it out at first target? And you could have closed it out at first target, and that of course is a nice profit. It's always nice to get 100% return on the trade, but ultimately this trade is now sitting at 600% return plus, and we need to sort of think about the longer term perspective. What's the overall goal here? Well, if we go back to those daily time frame, we can see that where the daily time frame is now, it's moving quite nicely towards that 128 level. If the market does get to 128, then that's going to be 11 targets that it will reach. That's 1,100% return on the trade if the market hits that 128 level. Now, we don't know whether the market's going to get there or not. It's certainly looking like it's aiming for that direction, and at this moment in time, the analysis that we took earlier last week looks like it's sort of bearing out, and looks like we're sort of heading towards that sort of price point and that sort of move for these higher time frames. But it's all about risk management. And remember that the original trade that we took on the market here was a very sort of tight trade. We managed to cover the risk quickly, and once we covered the risk, then we sort of managed to hold into this based upon these higher time frames to see if we can get a bit more out of it. And that's how we make those decisions around whether we turn a trade into a swing, in other words hold it for multiple targets, or whether we book it for a sort of 1-to-1 or a 2-to-1 trade. So I certainly hope that helps on our sort of methodology and how we think about trading and trade management. And again, if you like the technicals and the types of things that we do, please consider subscribing to our YouTube channel and consider subscribing to our market newsletters. Hope it helps, and look forward to speaking to you next week. Bye for now.